Counter trading is something very complicated. Most traders try to explain these things to newbies or to their students, and they end up sounding complicated. And today I'm going to break down the full meaning of counter trading in this video, and you will understand how to counter trade and the things you should avoid while counter trading. All right, because you are trading against the trend. Counter trading, anytime you hear counter trading, it means you are trading against the trend. All right, the trend is bullish and then you are selling. The trend is bearish and then you are buying. All right, that is counter trading. But we do this with wisdom. All right, we don't just counter trade just like that. We need enough experience. That's why you see that if you're a newbie or if you're a student, your mentor will tell you to trade and go with the trend. All right, your mentor will tell you to trade with the trend, go with the flow. But if you're an expert, all right, if you're a professional, you know how to perceive the market. You now perceive the market in a different way. You can be able to analyze and identify a good counter trade and make money out of it. All right, so today I'm going to show you how to counter trade in this video. So stick with me. All right, quickly. Now let's analyze Euro JPY. I'm not starting from the higher time frame. I'm just going to show you how to counter trade quickly. All right, so I'm not doing top-down analysis on this video. So as you can see, or if you have checked your charts before, you see that Euro JPY is giving us a shift of structure right here. I think I should clean this out. Let me clean this out. Let me give you a proper analysis. All right, so let's go to the 4-hour time frame. At the 4-hour time frame, you can see that Euro JPY is bullish, clearly bullish. All right, let me take this out. Clearly bullish. So we are having a break of structure to the upside right here. A break of structure right here, right there. And then after this break of structure to the upside, price is now retracing. Price is now retracing at this point. Now, as price is retracing now, I can call this a shift of structure. A bullish shift of structure. Right here. Right here. I can call this a bullish shift of structure. So this is a shift of structure, and I want you to understand something, that this is the low that shifted structure. All right, this is the strong low that shifted structure. Definitely there is absolutely liquidity below this point. All right, don't be deceived by anybody. This is a strong low and there's liquidity at this point. Remember, I keep saying that there's liquidity at every swing low and every swing high. All right, now this is a strong low. How is this a strong low? It is a strong low because it is breaking above this high here. I don't know if you can see this. It's breaking above this high, so this is a strong low and there's liquidity definitely below this point. Now let me show you what price did carefully. Like I told you, this is a strong low. Now let's mark it out and see what price did. Right there. Now, if you can see this clearly, we had a shift of structure already. And after price shifted structure, price retraced. And after this retracement, price is already at our discount. We are supposed to buy and expect the price to skyrocket, expect the market to skyrocket, because this is a discount point and price has retraced. So price is supposed to go bullish massively. But then again, price refused to go bullish. Why? Because there's liquidity below this strong low. I don't know if you are catching something. There's liquidity below this strong low. So price must take out that liquidity, because a lot of retail traders are placing their stop loss below this point. But if you perceive the market differently, you will know that there's liquidity below this point and you wait for them to get stopped out, then you can enter for the trade. I don't know if you're understanding me. So remember, liquidity below this point, price came not sweeping liquidity, and then price refused to break above this high here. So you see that there is no strength, not enough strength for price to keep moving upward. So price had to come back like this. I don't know if you are saying this. Again, let me take this out. So price had to come back and collect liquidity right at this point. Look at this. You can see this liquidity sweep. This liquidity sweep. Now, a lot of professional traders, if you are an aggressive trader, they are going to enter for their buy right at this point. After you see, because entering an aggressive trade is you entering after that the candlestick that sweep liquidity. After that candlestick that sweep liquidity has finished forming, then you enter immediately the second candlestick turned into a bullish candlestick. That is if you are buying. All right, so this is how to enter aggressively. All right, a lot of traders enter for the trade. Definitely, I know most people enter for this trade right at this point. So you wait for a liquidity sweep. As you can see, price came clearly to that strong low to take out the liquidity. So you see that there's liquidity at that point, definitely. All right, so now let me show you how to counter trade right at this point. All right, let me take this out. Remember, this trade has already played out. All right, I'm just showing you how I do my counter trading. All right, so clearly, as you can see, price was coming down to sweep that liquidity that I talked about, and now price gave us a shift of structure after sweeping liquidity. Now price has swept liquidity, and now price gave us a shift of structure right at this point. So after the shift of structure, we are having this huge fair value gap. I don't know if you can see this. We are having this huge fair value gap right at this point. Price must come filling it. Price must come filling it, and then we are having our order block right at this point. We're having our order block right at this point. If you don't know how to spot your order block, you can go check my video. I made a video talking about how to analyze and spot your order blocks. All right, so this is your order block right here. Definitely price will come to forward it, and this is our flip zone. This is our flip zone right here. This is our flip zone. There's liquidity below this flip zone. I hope you know that. Definitely there's liquidity below this flip zone because this is supply flipping into demand. All right, if price were to do its thing, this supply zone will continue going down and giving us another lower low. But then again, it failed at this point, and then it turned to a demand zone, therefore breaking above this high here. Therefore breaking above this high here. All right, so now price has shifted structure clearly, and then price was at this point, and now it's time to counter trade because definitely there's going to be a retracement, a pullback to that order block or sweep liquidity below this flip zone right here. All right, so let me show you how I entered for the counter trade and what I looked out for. All right, so as you can see, price was right at this point, and then I waited for a good confirmation. It's either I'm having a shift of structure or I'm having a candlestick confirmation, a good candlestick confirmation to tell me that, man, the sellers are in the market already because price was trading upward right here. And then look at this clearly. I don't know if you can see this. If you know anything or if you know much about candlestick, you can see that this is an upper wick candlestick, a rejection candlestick, and then there is another candlestick giving us indecision in the market, meaning that the buyers and the sellers are contemplating. They are trying to decide who is going to take over the market. All right, so after you have this small candlestick and then you have a bullish candlestick, you know that the buyers are still in control of the market. But at a situation whereby you are having a bearish candlestick, not just a bearish candlestick, an engulfing candlestick engulfing these two previous candlesticks, you can see that this is very huge. This should tell you that the sellers are already in the market. All right, this alone is the indication you need that the sellers are already in the market. So I entered for the trade right after this engulfing candlestick finished forming right at this point. Right at this point, and then my stop loss was right at this swing high here. and then my take profits, I targeted something 1:3, something like that, and my TP was somewhere here at this low here, and this was it. Played out perfectly well. Now let me tell you the reason why I didn't target something below this point, below this my flip zone and this my order block. Now there are two ways to these things. One is that you have to be careful while trading counter trade. While you are counter trading, you have to be very careful, extremely careful, because you will never ever know where the price will retrace to and then keep moving upward, because the directional bias is bullish. All right, the overall trend is bullish. You can't tell the market what to do. All right, price can just retrace a little bit and keep going. It happens. So you can't predict the market, that the market must come down to this flip zone or must come down to this order block. The price can keep going up then before it will retrace to that order block. I don't know if you're understanding me, because this is also a demand zone right here. There's also a demand zone at this point. Price can respect this demand zone and keep going up. Then after price get to some point, then it can retrace and come and fuel this fair value gap. You will never ever know. All right, you can't tell. So you have to set your TP at a close range, or let me say at the next swing low, and take profits immediately and get out of the market, because you are not with the trend. You are not going with the trend. So you should be skeptical and you should be quick. All right, and take profit and leave the market immediately. All right, so this is how I did it, and I might still enter for this trade again if I'm having a shift of structure below this low. If I'm having a shift of structure below this low and then I wait for a retracement, then I can enter for this trade. All right, now let me show you another example of a counter trading. As you can see here, the price is clearly bullish. All right, this is USD JPY. The market is clearly bullish right at this point. So as the market is bullish, just like I analyzed previously, we're having a break of structure to the upside and then a pullback. Price pulled back to a discount point, and also collected liquidity below this strong low here. Price collected liquidity below this strong low here and then gave us a shift of structure right here. Give us this shift of structure. All right, after this shift of structure, price definitely going to pull back. All right, so price gave us, I don't know how many of you can spot this. What are you guys, what will you call this? At the situation whereby price retraced not to at least 50% of your discount or 50% of this movement, and then price kept going up. What are you going to call this? What do you guys call this? Let me give you a moment to answer that question. What will you call this? Will you enter for the trade right at this point and target something higher at this swing high, or what will you do? Definitely, this is an inducement right here. The smart money keep doing these things for you guys to be trapped and thinking that price has already retraced, and then you keep buying, taking profit at the next swing high or something. This is inducement. All right, there's liquidity below this point. Don't be tricked. All right, so as you can see, I spotted that out, knowing fully well that there's liquidity below this point, because the thing is that price is not yet at my discount point, not even collecting liquidity below this point, or even tapping to any other block or any demand zone. Price just retraced not up to 50% and then kept going up. So you know that there's liquidity below that point. All right, don't be tricked like other retail traders. All right, so as you can see, price get to this point and then price started trending bearish. Now the market is bearish. Let me show you how I counter traded right at this point. Let's go to the 1 hour time frame. Let me show you how I counter traded. Let me take this out so I can explain better. All right. Now price is bearish. As you can see, price is bearish, giving us a lower low, a lower high, a lower low, a lower high, a lower low, a lower high at this point. Yeah, a lower high at this point, a lower low, a lower high, and then a lower low right at this point. Now if you can see clearly, price retraced but not filling this fair value gap here. You can see this fair value gap right at this point. Price has not filled it up yet. All right, price has not filled that fair value gap yet, but you can't predict the market. All right, you can't tell the market what to do. So price kept going down, definitely, or obviously price kept going down. Now we are spotting our premium and discounts because we are not having a clear retracement yet. All right, ideally we are supposed to be trading bearish because the trend is bearish, the overall trend is bearish, the market is bearish, so we are not supposed to be buying. But then again, buying is counter trading, and that is what I'm talking about. All right, so price came to this point and started buying because price had to retrace to facilitate the pullback before continuing going down. All right, so as price was buying right at this point, if you had seen the trend line that I drew right at this point, it's because there should be liquidity above this point. I drew and I wrote something like this. I wrote something like this: liquidity. I wrote something like this. Right here. Down. Okay, since it's not writing, let's just continue with the analysis. All right, so ideally there's supposed to be liquidity above this point. Why? Because this is a fair value gap. All right, price will come filling it up, but then again we have two fair value gaps. You can see this 1, 2, 3 candlestick giving us a fair value gap, and then this one huge candlestick giving us another fair value gap. Now in your mind, which one is more valid? Which one is more valid that price is likely going to retrace to? Definitely this one huge candlestick is more valid. All right, there's much liquidity at this point than the one at this point because we are having 3 candlesticks, and then we are having just one candlestick doing the whole thing. You can see it's very engulfing other candlestick right at this point. It's very huge. So this one is more valid. Price is likely going to retrace to this one first before any other thing. So I just spotted this out. Maybe there's going to be a liquidity at this point for price to tap into this fair value gap. But then again, I saw price doing this. Look at this. Price was trading bullish, higher high, higher low, higher high, higher low, higher high. And then now we had a shift of structure. Let me take this out. And then now price shifted structure with a lot of liquidity. This is very clear that the sellers are in the market, all right, aggressively. They are in the market. So price started selling and then shifted structure below this our lower high here. You see that? Sorry, our higher low here. So price shifted structure and then starting to pull back. Now I'm trading the pullback. I'm counter trading because I'm supposed to be selling, but then again I'm counter trading right here. All right, so let me show you how I entered for this trade. After we had that shift of structure, now let's go down to the 15-minute time frame. All right, so this is the shift of structure right here, like I spotted on the 1 hour time frame. The shift of structure, and then we are waiting for a good confirmation to show us that price is going to pull back to fill that fair value gap. All right, to fill that fair value gap and also tap into our our supply zone and also our order block. All right, if you can spot those things, you can spot that. All right, I don't want this video to be too long. So as you can see clearly, let me zoom in so you can catch something. What did you see here? a shift of structure. We're having a lower low, a lower high, a lower low, and then price shifter structure. Boom. Now we had that clear shift of structure right here, and then price pulled back. Now after this pulling back, you see this engulfing candlestick, this huge bullish engulfing candlestick. That's a good confirmation for me to enter for the trade. That alone is a huge and a perfect confirmation. All right, so I entered right at this point, and then my stop loss at this swing low here, and then my take profit at, like I said, while you are taking or setting your TP, you should be very quick. All right, don't set your TP too high, all right, because you are counter trading. The overall trend is bearish. Price is just pulling back to facilitate the pullback of this shift of structure right here. So the overall trend is not bullish, it's bearish. Don't be deceived to target something higher. Just target something close. All right, so at the situation whereby you are having this kind of fair value gap, you should target at least 50% of the fair value gap. It's enough. 50% of that fair value gap is enough. All right, don't target something higher because you are counter trading. All right, price must not hit your supply zone or your order block right at that supply zone all the time. Most time price will just fuel the fair value gap, 50% of the fair value gap, and just keep going up. All right, so you can tell the market what to do, you can predict the market. So I targeted 50% of this huge massive bearish candlestick here, this fair value gap here, or rather you say this inefficiency here. I just target 50% of it, and as you can see, played out perfectly well. So you see that price came to that same 50% and then tapped into it and then start reversing. All right, so be very careful while you are trading. All right, so while you are trading your counter trade, while you are counter trading, be very careful and take profit immediately and get out of the market. You can't tell the market what to do. There is nothing, or there is no connection, no relationship between your belief system and what the market will do next. Because the thing you should understand is that you are paying the market to tell you what it will do next. All right, you put money into the market, you buy with an amount of money, or you sell with an amount of money for the price to show you what it will do next. And then if the price takes you out, it's cool. All right, you check out what happened, why price took you out, and then you try to not to repeat the same thing again. All right, but if price went to your TP, then happy days. All right, go and rejoice, and then look out for what you did right. All right, always review. Sorry about that. Always review your trade, man. All right, review your trade, and then you know what you did right, and then you try to repeat it again. Okay, so this is how you counter trade. I hope you've understand something. If there is nothing you understand, or if you didn't understand anything, just say it in the comment section. I can explain better in the comment section, or I will do another video talking about what you asked, what you didn't understand. So just leave your comment below what you understand and what you didn't understand, so I will know. All right, so I think I'm done now. All right, I'm done. So if you watched me to this point, subscribe to this YouTube channel, and also like and share this video so that more people will gain clarity about trading, all right, about the forex market entirely, all right, and become profitable. All right, so here, like I said, like I have always been saying, we teach trading in a way that even a 5-year-old will understand. All right, so happy trading day and happy trading week. Don't forget, my name is Sammy Trade, or you can call me Sammy. All right.